You hear the names Warren Buffett, Charlie Munger, Berkshire Hathaway, and you immediately think investment genius, right? But what's the actual playbook behind their decades and decades of success? It's not some complex algorithm or a series of crazy risky bets. So let's pull back the curtain and decode the surprisingly simple yet profoundly powerful philosophy that built one of the world's greatest companies. First things first, why should you even care about their playbook? Well, look at these numbers. Between 1965 and 2006, the S&P 500 did a pretty respectable 10.4% per year. Not bad. But Berkshire Hathaway, they averaged a whopping 21.4%. They literally more than doubled the market. And get this, the kicker? The Berkshire number is after taxes. That is just a staggering level of outperformance, and they kept it up for over 40 years. Okay, so that leads to the million-dollar question, right? The one we're all here for. How in the world did they do it? How do you pull that off, not for a year or two, but consistently, decade after decade? It's not some kind of magic trick. It's all about their mindset. And that mindset, well, it starts with a totally different way of looking at the world. You see, to really get Berkshire, you have to stop thinking of them as stock traders. They're not just buying little blips on a screen. They are business owners, buying actual companies. So they basically have two ways to own a piece of the action. Yeah, they'll buy stocks, but only, and this is a big only, when the stock is trading at a price that's a way better deal than buying the whole shebang. But what they really love, what really gets their engine going, is buying entire businesses. I mean, why settle for a slice when you can own the whole pie, right? And just let that cash flow roll in forever. All right, so let's get into the nitty-gritty. When they do decide to buy, what are the rules? It really comes down to two things: finding the right opportunity and, maybe even more importantly, having the right temperament to actually pull the trigger. You've probably heard this one before. It's their most famous line, and it says everything about their mindset. It's all about emotional discipline. When the whole market is freaking out, when there's blood in the streets and everyone is selling, that's when Berkshire goes shopping. And when everyone's giddy, throwing money at anything that moves? Nope. They're just sitting back, waiting patiently for their moment. So what exactly gets a company onto that exclusive shopping list? It's basically a 4-point checklist. First, they want a fantastic business, something with what they call a durable competitive advantage, a moat to protect it. Second, the price has to be right. They're looking for excellent value and they are not going to overpay. And finally, they're making a massive long-term bet on American business itself. That's it. Simple, disciplined, and it clearly works. Okay, so buying is one half of the equation. But here's where Berkshire gets really interesting, maybe even a little weird. We're talking about the most counterintuitive part of their whole playbook. It's not about selling, it's about not selling. Just let that one sink in for a second. Regardless of price, that is wild. They are not trying to time the top or cash out when a stock is hot. Nope. If they own a wonderful company, their favorite time to hold it is forever. The goal is just to buy it right and then sit on it. And they are so serious about this. They have this great phrase for what everyone else does: gin rummy managerial behavior. You know, like in the card game where you're always trying to discard your worst card. They don't do that. They'll actually hold on to a business that's not doing so great as long as it's still making some cash and has managers they trust. It's the total opposite of how Wall Street thinks. And if you want proof that this crazy never sell idea works, just look at American Express. Okay, so they bought him for $1.3 billion. At the time, they were getting $41 million a year in dividends. Fast forward, that annual dividend check is now over $300 million, and the whole stake is now worth, wait for it, 22 times billion dollars. That, my friends, is what happens when you buy a great business and just let the magic of compounding do its thing. So you buy great companies, you hold them forever. Sounds simple enough, but wait a second. How do you make sure those companies stay great? Well, this brings us to the real secret sauce, the part that's not on any spreadsheet. It's all about the people. Think about it. When Berkshire buys a great business, it usually comes with a great manager already in charge. These folks are often super rich already. They could just retire and go fishing, right? So Berkshire's whole job is to create a place that's so good to work at that these amazing leaders choose to stick around instead of hitting the golf course. It's all about creating a culture of trust and autonomy. And how they pay people is a huge part of this. It's super simple and it makes total sense. A manager's pay is tied only to the results of the business they actually control. They don't get some random bonus, a lottery ticket as they call it, just because the main Berkshire stock had a good year. It's fair, it makes them feel like true partners, and it keeps everyone focused on what they can actually influence. So, when you put it all together, buy great businesses at good prices, hold them forever, and trust amazing people to run them, you start to see what their real secret weapon is, their ultimate advantage. Warren Buffett told this fantastic story once. Imagine it's 1942. You've got about 114 bucks. You're scared about the war, the economy, so you put it all in gold. Today, that gold would be worth about $4,200. Okay, but what if, instead, you just took that same money and invested it in a broad slice of American businesses? You'd have over $420,000. That massive difference is the entire bet that Berkshire has been making for decades. And why do they make that bet? Because of one simple, powerful belief. Paper money, cash. Its value can get wiped out by inflation or bad government decisions. But a real, productive asset, a great business that makes things or provides services people actually want, that has real, lasting value. And that's why their plan is to forever keep most of their money in good businesses, not sitting around in cash. So it leaves you with a pretty big question, doesn't it? We're all living in this crazy world of high-frequency trading, nonstop news, and this feeling that we always have to be doing something with our money. But maybe, just maybe, the real secret, the ultimate advantage that Berkshire Hathaway has mastered, isn't about being smarter or faster than everyone else. Maybe it's just about being more patient.